Hello and a warm welcome. You've joined us on Market Cafe right here on ET Now. I'm Ashesha Advaryu. With me is Kanishka Sarkar joining us from our Delhi studio. And this is a show where we take you through all the cues that we are getting from global markets overnight, which are the stocks that you need to keep an eye out on in today's trading session. And we'll keep you up to speed with everything that you ought to know this Thursday morning. But Kanishka, let's get started with the global market cues then. And American markets ended on a positive note, but a lot of to and fro when it comes to firing Jerome Powell, isn't it?
That's right. Good morning, Ashesha. Well, it was a winning day on Wall Street. As you pointed out, after US President Donald Trump, he denied that he was planning to fire Jerome Powell from his position as the Federal Reserve Chairman. Now, if you take a look at how the indices performed, now S&P 500, that gained 0.3%, while the Nasdaq Composite added about 0.2%, whereas the 30-stock Dow, that rose around 230 points or about 0.5%. Now, 8 of the 11 sectors in the S&P 500, they closed higher yesterday. Now, these gains were led by gains in the healthcare sector, whereas the energy sector, that was the laggard. Now, remember, as you were pointing out, US stocks initially fell after a White House official said that Trump will likely soon fire Powell from his post, with the blue chip Dow dropping more than 260 points at its session low. However, equities did make a comeback after Trump downplayed those reports and said he was not planning on doing it, although he added that he does not rule out anything. Now, today, apart from the earnings in the US, the street will watch out for weekly jobless claims in the latest reading on June's retail sales data, and also the last month's exports and import price indexes. So that's how largely the US market setup looks like.
Let's also put the spotlight on the oil and gold market. In fact, Brent crude snapped its three-day losing streak. It is gaining marginally today. It is up nearly 0.7% as we speak to trade near that $69 per barrel mark. But several factors continue to remain at play for the oil market. One, of course, we got inventory data from the United States yesterday, and it says a mixed picture. One, distillate inventories rose on a week-on-week basis, but on the flip side, we have nationwide crude holdings which have declined. So mixed picture coming in when it comes to inventory of crude oil in the United States. Apart from that, a lot of tariff-related saga is what we got to hear from US President Donald Trump. He said that he will be sending tariff letters to 150 more countries, and the tariffs could range anywhere between 10 to 15%. So uncertainty related to tariff continues to persist. And apart from that, a comment that came in from US President Donald Trump that he does not intend to fire Jerome Powell. So several factors continue to remain at play for the oil market. Currently, it is trading with gains of nearly 0.7% to trade near that $69 per barrel mark. But as far as gold is concerned, remember that one ended nearly 0.7% higher yesterday. Today, it is down 0.2% and it is trading near $3,340 per ounce mark. Now, remember, traders are assessing the outlook for Jerome Powell's tenure. So a lot of uncertainty coming in from there, which continues to impact the oil market as well. So yes, for now it is trading near $3,340 per ounce, and we haven't seen much action when it comes to oil market over the last few trading sessions. Remember, it has been in that 68 to 70 range for the last few trading sessions.
All right, so that's how the commodity market is looking right now, but let's shift focus back to the Indian markets as well. Now, the Dalal Street, that witnessed a very flat move in yesterday's trading session. The Nifty 50, that extended its uptrend, albeit with moderate gains only. Now, it closed above the 25,200 mark. Meanwhile, broader markets, they underperformed. Let's go across to Snehi to get us a whole market roundup.
Well, yes, a very flat trading session is what we've seen yesterday. Absolutely flat on the Nifty with a very slight hint, a mild hint of a positive bias is what we've seen, but we've managed to close above that 25,200 mark, 25,212 to be precise. So that's how the Nifty has closed yesterday. Flattish moves coming in on sensex, although the Nifty bank held up quite well yesterday. You had very flat moves coming in from the broader end from the Nifty mid-cap and small-cap space as well. Some stocks that were in focus yesterday, M&M, Wipro, Tech Mahindra, SBI, Nestle, all of those stocks were buzzing. On the flip side, pressure being created on the Nifty by Shriram Finance, Eternal, Sun Pharma, Cipla, Tata Steel. So all of those stocks were the ones that were not doing all that well in yesterday's trading session. India VIX saw a further cool off of about 2%. So below that 11.5 mark is where we've closed for the India VIX as well. The advanced decline ratio was quite even Steven towards the day's end. In terms of sectoral moves and gainers and losers, PSU banks were the top performing sectors, almost about 2% higher. Is where PSU Bank shut shop for yesterday. PNB, UCO Bank, Bank of Baroda, SBI, Bank of India, Canara Bank. In fact, SBI was a big newsmaker on the back of its fundraising plans as well. So all of those stocks from the PSU pack were doing well. That followed by media, IT, auto, realty, FMCG, bank and energy on the flat line. On the flip side, what did not do well once again yesterday was Nifty Metal, and a 0.5% cut on that index with pressure on some of these steel stocks for a second continuous day, like Tata Steel, JSW Steel. All of those stocks were in the red. This is followed by Nifty Pharma and Nifty Financial Services, absolutely flat with a mild hint of a negative bias. So those were the levels at which the markets have closed, and the performance that we've seen in the market yesterday. Quite a flattish day of trade coming in. But when we interacted with our technical experts on the closing show yesterday, Sharan had to say that we can expect Nifty to open at 22,250. That's the resistance levels, and there could be a follow through if it breaks out above that. On the flip side, the immediate support could be at 25,100. So watch out for all of these levels. And well, yes, all eyes are going to be on trade today.
Keep an eye out on all of these levels in today's trading session. Remember, Nifty ended absolutely flat yesterday above that 25,200 mark. But to assess the macroeconomic setup this morning, we are now joined by Hugh Johnson of Hugh Johnson Economics. Mr. Johnson, thank you so much for taking your time out and joining us here on ET Now. White House official yesterday said that Trump is looking to fire Powell. However, Trump later clarified that he does not intend to do so. How do you read this entire situation, and what does this mean for central bank's independence back in US?
Well, it's the one thing that he's on again, off again. When we're talking about tariffs, we've seen that just to be an on again, off again phenomena. When it comes to Powell, it's on again, off again. The truth is, everybody shouldn't take what he says about firing Powell seriously. And the reason I say that is because he cannot fire Powell. It's against the law. So he can say that he'd like to fire Powell, but the truth is he cannot fire Powell. The Congress can fire Powell, but the president cannot. So don't take anything he says about firing Powell seriously. Powell is not going to quit, is not going to leave. He will be there until his term expires or ends, and just simply accept that.
All right. Hi, Mr. Johnson. This is Kanishka also joining in. Like you said, Trump cannot fire Powell, but in a statement yesterday, he did say that he does not rule out anything. So what does he mean by that? What are the actions that he can take against a Fed chair?
I haven't a clue what he means by that. There's really nothing he can do when it comes to Powell. Powell's going to stay as chairman of the Federal Reserve, as I mentioned, for another year or so. I'm not exactly sure what the term is, but he's going to be the chairman of the Federal Reserve. So you can just simply relax and expect to continue to see his leadership of Powell. And I might add that Powell has done an extraordinary job. When he started as chairman of the Federal Reserve, I was a little bit upset or nervous because he didn't seem to be comfortable with some of the economic terminology that he had to deal with. But he's come a long way. And look, number one, he's been very successful as the chairman of the Federal Reserve. Things have worked out well. The economy continues to expand. Let's not forget that inflation was at 9%. It has now come down close to, say, 2.5%. No, I know we have not hit the 2% target, but he's done a really credible job on bringing inflation down and at the same time preserving ongoing growth in the economy. And it looks to me as though that combination is going to continue in the foreseeable future. He's done a great job. He can't be fired. He's not going to quit. We're going to have Powell for at least the next, I think it's a year that his term when his term expires.
Has done a great job and he cannot be fired. That's the word coming in. But how do you assess the entire tariff situation and what impact impact will it have on global markets? The other day we had some tariff announcement that came in on Indonesia. Today, of course, Donald Trump has said that he's close to making a deal with India as well. Do you think markets have already reacted to anything that the market was expecting when it comes to tariffs, and perhaps we will not see any major significant impact on margins irrespective of the kind of announcements we see?
This is going to play out very much the way Trump won 2018, 2019 played out. And the number one thing is there's going to be volatility in what Trump says. It's going to be on again, off again when it comes to tariffs with any individual country. Remember, we talked about having roughly 60 to 70 deals done by now. We got 3. So it's going to be on again, off again. There's going to be a great deal of volatility on the tariffs that are threatened. That's number one. The second step in the whole process is, which we're starting to see unfold, we saw it with the consumer price index, and that is you're going to see the rate of inflation, the inflation that's associated with increased tariffs, start to show up in the consumer price and personal consumption expenditure price index, which are the important indexes which are followed by the Federal Reserve. In other words, the tariffs, the inflation associated with the tariffs will start to show up. The third thing you'll see is that the Federal Reserve will respond to that combination. And I think the way they're going to respond is they will not reduce short-term interest rates. The consensus now is they're going to reduce short-term interest rates one time in September and maybe one time in December. I don't share that view because I don't think we'll be making enough progress on inflation, and I think the economy will be holding together, and the Federal Reserve does not have to be in a hurry to reduce short-term interest rates. So I think this is going to start to play out very much the way Trump won 2018, 2019 played out. Remember, we had a declining stock market when we were going through the increase in inflation during 2018 and the response of the Federal Reserve. But that was followed in 2019 by the Federal Reserve reducing short-term interest rates as inflation came down, and the stock market did extraordinarily well in 2019. So tough times maybe in the foreseeable future, but after we go through those tough times of somewhat higher inflation, a lack of Federal Reserve response, we'll start to get good stock markets. So I'm telling everybody to be patient. Be very, very patient. We're headed towards good times.
Okay. So traders and investors do need to be patient at this point in time in the current market. Thank you so much, Mr. Johnson, for joining us today and helping us decode the macro market setup today with respect to Fed, inflation, as well as tariffs. Thank you so much for joining us this morning. All right, then, let's move on and shift focus back to the Indian markets. Now, Sharad is here to give us a roundup of the F&O setup today.
As we are tracking the global cues and earning seasons domestically, the India VIX is still at a very stable level, actually coming down as low as almost 11.5 levels. But interestingly, for the last 2 trading sessions, the markets have been recovering intraday basis. And interestingly, the PCR numbers, they are also coming at Nifty at 0.8 and Bank Nifty at 0.86, which is still at a comfortable levels. Overall, the index features the change in open interest has gathered space as compared to yesterday. And for the second straight day, the status remains as long build up. Interestingly, the call 25,200 call writing is happening, and same number put writing is also happening in these levels. When it comes to Nifty, highest open interest strike price for the Nifty weekly expiry is for put 25,200, and for call the amount is 25,500. Of course, there is a slight increase in the call numbers. Bank Nifty index features there has been a change, and for second straight day, the long build up we are seeing. Highest open interest strike price for Nifty monthly expiry is put is at 56,000, call is at 56,000 levels as well as we go into the expiry day today. The FI long position trade that has also remained slightly stable and it's down to almost 18.2%. We might see a recovery or a bottoming out of this number. DI long position that has actually gone up from 66.6 levels to 67.9% if you compare it on a day-on-day basis, and the retail trading position that has remained largely flat at 63.8%. F&O band stacks, we are having Angel One, which came out with a weak set of numbers, and also Hindustan Copper and Glenmark Pharma are in this list.
So that's how the FNO setup is looking like for today's trading session. But Sharad, stay on with us and let's now put the spotlight on a whole host of stocks that will be in focus today. Abhishek, Sharan, Varun Dubey and Shrishti Sharma are now joining us to take us through the list. But Abhishek, coming to you first, and we have Tech Mahindra. It reported its numbers. And we also have SBI on the back of an exclusive. Tell us.
Tech Mahindra has reported its Q1 results. The numbers were largely mixed bag. During the quarter, the performance was largely driven by the banking, retail and the communication segment. However, the manufacturing segment remained soft. The TCVs were strong in the quarter. The TCVs were largely higher than that of the average of last 3-4 quarters. Management is broadly indicating that the FY26 performance would be better than that of the FY25. However, we believe that the resolution of this tariff-related issues are critical for any kind of a revival in the overall demand scenario. Stock is likely to remain range-bound in the near term. Other than that, SBI has also launched its QIP. The floor price for the QIP is fixed at rupees 811. It is likely to raise up to 25,000 crore rupees via this QIP. This would be the third QIP by SBI. Earlier in 2017, the company has raised almost 15,000 crore via QIP. So let's see how the SBI will get response this time.
All right, so SBI and Tech Mahindra, two key names to track today. But Sharad, now coming to you, Angel One, another earnings candidate, and a couple of aluminum names on your list. What's the news flow here?
Capital markets theme stocks might be under selling pressure in the day's trade, and these stocks include BSE, CDS and even broking stocks as the earnings season starts. When it comes to the broking names, Angel One came out with a very weak set of numbers, and of course the impact coming in because of the FNO regulations which were changed by SEBI as well, and the turnover numbers that has actually also come down recently. Of course, SEBI also came out with its report on Jane Street and short sellers as well. Now, looking at the headline numbers, the weak set of quarterly numbers, PAT came in just 115 crore rupees, but the flow, the 61% downtick on a year-on-year basis and almost 35% degrowth on a sequential basis does raise concerns over the broking stocks in the day's trade. Also, Alcoa came out with its numbers, the world's 8th largest producer of aluminium, and aluminium stocks would be in focus such as Nalco, Hindalco and even Vedanta. Overall, the revenue beat estimates slightly. EBITDA was largely in line, but important thing is that the 2025 volume guidance that has remained unchanged, but the aluminium shipment guidance that has been lowered. So of course, important developments will be happening as tariff imposition announcements come for metals.
Okay, so all aluminium related stocks, Hindalco, Nalco in focus, and the back of that several other stocks will also be in focus. But Shrishti, which stocks are on your radar this morning?
So firstly, let's talk about Maruti Suzuki, because the company has come out with an announcement that they're going to be implementing 6 airbags in actually Ertiga and as well as Baleno, and for both of these models that will actually have an impact on the prices as well, wherein Ertiga prices will also be hiked, and along with that, a 0.5% increase in the Baleno prices will also be effective on the back of 6 airbags being implemented in both of these models. So that's the first news flow that we are tracking. Other than that, it's Lupin within the pharma bag that will be in focus today, as the company has launched an ophthalmic drug in the United States, which as per IQVIA has an estimated annual sales of around $55 million. So on the back of this positive news flow, Lupin is the other stock that will be in focus. And lastly, within the real estate pack, all eyes will be on Godrej Properties as well, because a positive announcement trickling in for the company, wherein they have actually acquired 50 acres of land for a plotted development in Raipur with an estimated saleable area of 9.5 lakh square feet. And on the back of this positive development, all eyes will be on Godrej Properties as well.
All right, so all eyes on Maruti Suzuki, Lupin and Godrej Properties today. Thank you, Srishti, for that. But Varun, now coming to you, which are the stocks on your list?
Hindustan Zinc, because the company has been declared a preferred bidder for grant of composite license for e-auction of Jhandewali Satipura Amalgamated Potash and Halide Block in the state of Rajasthan. So on the back of this news, keep an eye on Hindustan Zinc. Also keep an eye on Ramco because the company has commissioned a new project, a railway siding project, which includes a track length of approximately 23 kilometers and a Wagger tippler equipment. So keep an eye on Ramco Cement as well, and also keep an eye on Glenmark Pharma, because there was an investor day, and in the investor day the company has given guidance on margin. The company says that because of the AbbVie deal, the overall margins will actually accelerate to 23% in FY26 from the 18% that the company commands currently. So keep an eye on Glenmark Pharma as well.
Glenmark Pharma will also be in focus. Varun, Abhishek, Shrishti, thanks so much for joining us and filling us in with all the stocks that you need to keep an eye out on in today's trading session. But which are the other cues and events that you should keep an eye on? Snehi is now joining us with exactly that. Snehi.
Well, yes, lots of cues to watch out for. Given it's Thursday, all eyes are going to be on the weekly Nifty expiry, so watch out for this. In terms of global macro indicators, you have from the US retail sales numbers that will be out along with initial jobless claims. From the UK, you will have jobless claims along with unemployment numbers out. From Eurozone, you'll have the inflation print in the form of CPI that will be out, so track that sector, that metric very closely. And from Japan, you'll have the trade data numbers that are going to be out. In terms of global earnings, all eyes are going to be on Netflix, Novartis, Abbott Laboratories, PepsiCo and ABB. So it's going to be the broader pharma space, consumption space, entertainment. All of these stocks are going to be in a buzz in overseas markets. But shifting to action back home in terms of some Q1 earnings, all eyes are going to be on Nifty 50 majors, Wipro, Axis Bank and Jio Financial that will be coming out with their Q1 numbers. But even other than these Nifty 50 stocks, you have a whole list of stocks from the broader end of the market, the likes of HDFC, EMC, Tata Communication, LTI Mindtree, Polycab, CEAT, Indian Hotels, and a whole host of other stocks that will be coming out with their numbers. So watch out for all of these stocks very closely in the trading session. In terms of annual general meetings, you'll have Tech Mahindra and Ajanta Pharma that will be in focus. And in terms of corporate action and board meetings, lots to watch out for here as well, because Tata Communications, along with its earnings, will also be mulling fundraising. You will also it's also the last day to buy shares of Happiest Minds, HCL Tech, Jubilant Foodworks, Birlasoft, Cummins India and a whole list of other stocks if you wish to be eligible for their interim dividend record date. So watch out for that as well. And lastly, in terms of other events, the G20 finance ministers and central bank governors will be meeting in South Africa. And from the Fed commentary front, San Francisco Fed President Mary Daly is all set to speak. So watch out for all of these cues. Lots to watch out for and lots to track.
All right, so lots of cues to watch out for today. But on that note, we'll take a very short break on this edition of Market Cafe. We'll be right back with more on the other side.
Level. Kospi is also down 0.6%, 3168. We have Hang Seng on the flip side that is up nearly 0.5%, 110 points higher for the Hang Seng index. We have Shanghai Composite Index, that one is absolutely flat as we speak. And we have ASX 200, which has also had a positive start. That one is up nearly 0.8%. Remember, Nifty implied open is suggesting a slightly positive start for the Indian market. That one is up nearly 30 points near that 25 to 77 mark. Remember, we had tepid session yesterday as well, and today GIFT Nifty is indicating a 30-point uptick for the Indian markets. Kanishka.
That's right. So a 30 points uptick is what we are expecting for the Indian market at this point. But shifting focus back to some domestic news developments. Now, the government will scrutinize recent agreements of Dixon Tech with Chinese firms. But sources have told ET now that due process will be followed for the approvals of this joint venture. Sumita is joining us with all the details.
That's right. Government sources indicate that a due process will be followed under Press Note 3 on Dixon's JV with Chinese players when Dixon's application is submitted to the government. Remember, under Press Note 3, which was introduced by the government in 2020, it made prior approval mandatory for foreign investments from countries that share land border with India. These countries are China, Bangladesh, Pakistan, Bhutan, Nepal, Myanmar and Afghanistan. Now, related to the electronics components manufacturing scheme, which the government introduced with an outlay of over 22 1,000 crores. There was a clause which essentially was related to participation by Chinese companies. But this participation had a clause that it can only happen in case of JVs of these Chinese companies with Indian entities, where Chinese companies will have strict limits on equity ownership and the Indian partner will have a larger share. There has to be a mandatory tech transfer as well. That was also one of the conditions. Now, in case of Dixon's proposed JV with China's Chongqing Yuhai Precision Manufacturing, Dixon is likely to hold a majority 74% stake in the JV, and the intent of this JV is to focus on manufacturing precision components for laptops, mobile phones, IoTs, autos, etc. So a review will be done by government, including a due process, which will be followed under pressed note 3.
Electronic component manufacturers, including Dixon Tech, in focus on the back of that. But shifting focus to the aviation sector then, and Air India has completed precautionary safety checks on all its Boeing 787s after DGCA directives issued on July 14. The airline's engineering team inspected the fuel control switch locking mechanism over the weekend and found no issues. Air India says it is fully compliant and continues to stress pilot vigilance and timely defect reporting. Samir Dikshit, my colleague, is now joining us with more details on this.
In an important development, Air India Flight Operations Department in an internal communication has conveyed to its pilot that the engineering department has completed the safety inspection, specifically the locking mechanism of the fuel switch control on the entire Boeing 787 fleet, also on the Boeing 737 fleet, and the entire inspection has been completed, and so far no issues have been found. In addition to this, it has also been conveyed to the pilot that Boeing 787 and 8, so this Dreamliner aircraft, it has also undergone throttle control module replacement, and it is as per the Boeing maintenance schedule. So this important development related to airlines aircraft, the safety inspection has been completed, and the entire safety inspection was carried out after the Indian Aviation Regulator DGCA issued order on Monday 14th that the airline, those who are using Boeing 737 and 787, they have to do the precautionary safety check of the fuel switch control system, the entire locking mechanism. They have to once again inspect this locking mechanism, and this was all in the light that once the preliminary report by AAIB was out related to Air India's aircraft crash, it highlighted the point that the fuel control switch is one of the aspects that needs to be re-looked, and in the same light this order was issued by DGCA, but now Air India has completed the safety inspection, and it is very likely that the same report will be updated to the regional officer of the DGCA very soon.
All right, thank you, Samir, for getting us the latest on Air India. But moving on to some more news developments. Now, an Indigo aircraft en route from Delhi to Goa made an emergency landing at the Mumbai airport due to an engine failure shortly after takeoff. The plane landed safely and passengers were accommodated on a different flight. Investigations by the DGCA and airline engineers are underway. In a move aimed at combating rising obesity rates, AIIMS Delhi will soon display boards at its canteen showing the sugar, oil and calorie content of food items. This initiative follows the Health Ministry's push for transparency in food labelling to promote healthier choices among hospital visitors and staff.
UIDAI is taking proactive steps to ensure the accuracy of the Aadhaar database by deactivating Aadhaar numbers of deceased persons. Collaborating with the Registrar General of India, UIDAI has accessed over 1.55 crore death records and launched a report death of family member service on My Aadhaar portal in 24 states and union territories. Donald Trump says he is not firing Fed Chair Jerome Powell. Highly unlikely, he told reporters, unless there's a fraud. But he took a jab, saying that the job isn't hard if you're smart, and he's only interested in, and I quote, low-interest people for the role. Trump claims many want the Fed chair's job and hinted at the change in the next 8 months. Meanwhile, he also teased a possible new trade deal with India, confirming that talks are underway. Listen into that excerpt.
Planning on doing anything. We're very concerned. He's doing a little renovation for $2.5 billion of the Fed, building a a renovation, and they have a close to $900 million cost overrun. And it's a shame. But the biggest cost overrun is the cost overrun for interest rates, because we should be paying 3 points lower, and we would save $1 trillion a year in interest if that were the case. And all it is the stroke of a pen. And that goes for his board, too, because his board is not doing the job, because they should try and rein this guy in. So he's doing a lousy job, but no, I'm not talking about that. Fortunately, we get to make a change in the next, 8 months or so.
All right, so that's the latest word coming from Trump. But moving on, the U.S. economy is slowly rebounding from trade war lows, but hiring remains weak and inflation risks are rising. The Federal Reserve's latest beige book shows. Now, growth has picked up slightly since May thanks to eased tariffs, yet businesses remain cautious amid ongoing uncertainty. Companies are facing rising input costs and many are starting to raise prices. The Fed sees inflation ticking up by late summer, but is expected to hold interest rates steady for now.
And shifting focus to macro data from the United States then, U.S. producer prices remained unchanged in the month of June. And according to the latest data from the Labor Department, headline PPI was flat on a month-on-month basis compared to economist expectations of a 0.2% rise. On a year-on-year basis, producer prices rose 2.3%, slightly below the estimated 2.5% mark. And excluding the more volatile food, energy and trade services components, core PPI was also unchanged for the month, again underperforming expectations of a 0.2% rise. However, core prices rose 2.5% on a year-on-year basis. That's right. Now turning focus to big banks' earnings. Now Goldman Sachs reported stronger than expected numbers for the second quarter. The bank saw a healthy rise in quarterly profit, helped by solid performance in equities and investment banking verticals. Bank of America also reported favorable set of earnings for the quarter gone by. Profit for the quarter came in higher than expectations, helped by growth in trading division. And shifting focus to some global stories then, Donald Trump is softening his stance on China, aiming for a summit with Xi Jinping and a quick trade deal rather than confronting structural imbalances. Reports say Trump is now the least hawkish voice in the room, focused on headline wins like purchase agreements. This marks a shift from his earlier rhetoric and has also raised concerns inside the administration. Reports come days after the US eased curbs on Nvidia's H20 chip sales to China. Japan's exports shrank for the second straight month in the month of June, down 0.5% on a year-on-year basis, defying expectations of a rebound. Exports to the US plunged 11.4% with no trade deal in sight and fresh 25% US tariffs set to kick in on August 1. Shipments to China also fell nearly 5%, with auto exports already hit by tariffs since April. Fears of recession are now back. Canadian retail giant Alimentation Couche-Tard has pulled its massive $47 billion takeover bid for Japan's Seven & I holding, citing a persistent lack of good faith engagement. The deal, first floated at $38 billion and later raised, collapsed after Seven & I allegedly failed to share key financials. Despite public comments suggesting openness, Couche-Tard says no real progress was made. United Airlines trimmed its full-year earnings forecast, citing ongoing constraints at its key hub. However, CEO Scott Kirby struck an optimistic tone, saying the world is less uncertain as United Airlines reaffirmed third-quarter guidance in line with Wall Street expectations. Premium travel remains strong, but FAA-related disruptions continue to dent margins. And the European Union has unveiled a €2 trillion budget proposal for 2028 to 2034 period with a sharp focus on defence. European Commission President Ursula called it a budget for today's realities, proposing a defence and space budget that is 5 times the current level. The plan keeps members' contributions steady while tapping 5 new revenue sources, including levies on e-waste and tobacco. Meanwhile, in other news, Israeli ministry carried out a series of powerful strikes on the Syrian capital Damascus, which escalated the campaign in support of an Arab minority group. So far, 3 people are reported to be killed and 35 people are injured post the attacks. Syria has strongly condemned Israel for the striking several government buildings, which involves Ministry of Defense, and it's a dangerous escalation by Israel. United States Security Council will meet today to address the conflict.
All right, so those are all the top global stories that we are tracking this morning. But on that note, we'll take a very short break and be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions.
QIP, wherein the company would be raising around 25,000 crores, and this would be the biggest QIP ever in the Indian capital markets, and this would actually mark its first ever such kind of fund infusion by SBI since 2017. The floor price is at 811 rupees 5 paise, and this is at around 2.3% discount to yesterday's closing, and the company will also offer a 5% discount to the floor price. Now, if you look at the overall financial impact, because this fundraising is being done through equity, so this will impact the tier 1 capital of the company. The tier 1 capital of the company will actually rise from 12.1% to 12.95%, and it will actually impact the capital adequacy ratio of the company as well, which is expected to increase from 14.25% to around 15.1%. This will impact the net worth of the company by around 5.7%. There will be an increase from 4.41 lakh crore to around 4.66 lakh crore, and at the floor price of 811, the overall equity dilution for the company would be around 3.5%. This will also impact the book value per share of the company, and the book value is actually expected to increase by around 2.1%. So it is the much awaited QIP of SBI, which has been launched at around 811 rupees, which the company will raise around 25,000 crore rupees, and this will have a financial impact on the company, especially it will augment the tier 1 capital of the company as well.
All right, so that's the latest we are picking up on SBI QIP front. But Varun, stay on with us. We'll come back to you shortly. But before that, let's focus on Tech Mahindra as well, which reported a mixed set of numbers for the first quarter of FY26. While revenue has managed to meet expectations at 13,551 crore rupees, profit missed estimates coming in at 1,141 crore rupees for the quarter. Meanwhile, total deal wins stood at a little over $800 million. The management says that the macro picture remains hazy, but it remains optimistic about the IT business opportunities. Let's also listen in to what Tech Mahindra's management has to say.
$50 million clients over the past year. Again, I think on the whole, and we've done this analysis obviously on an ongoing basis, our largest clients are growing much faster than the company average, and so we remain confident about our focus on our largest clients and our opportunities to grow them.
No, the only point I'll say that is quarterly, the macro is so uncertain that there's quarterly variation on different customers at different point of time. So I think we should look at it as more as annual trends, and this is a metric that we had committed to share in our annual report out, right, on our long-term plans.
Yeah, so look, like we said on the macro picture is still quite hazy, right? I feel that in certain sectors which have been impacted by tariffs and by demand activity like auto, I think the sentiment is still not conducive to significant discretionary investments. In some other sectors like telecom, for instance, we have seen a stabilization and growth in this quarter, which we expect will continue. For high tech, like we said, we expect a recovery certainly in the second half of the year. BFSI has been more stable. I think we are seeing a lot of traction and activity in our European business, which is also reflected in our numbers and in our APJ businesses. So it's a mixed picture, right? It's a mixed picture across geographies and across industries.
Mixed picture, that's the word coming in from the management of Tech Mahindra. But shifting focus then to Axis Bank, and it is all set to report its Q1 earnings. And Street is expecting a softer quarter with asset quality deteriorating and margins which are expected to remain under pressure. Varun, tell us, what are we expecting from Axis Bank this time?
We are expecting a soft quarter from Axis Bank, wherein the net interest income, they are expected to grow in the low single digit. We are expecting the net interest income to grow by around 2.5% and the PPOP to grow by around 9.9%. The slippages are expected to grow in this quarter. It would grow by around 25% on a quarter-on-quarter and year-on-year basis. So definitely it will have an impact on the overall profitability of the company when the profits are expected to grow merely by 5.5% to around 6,370 crores. Now the slippages are expected to grow because of the stringent provisioning practices or the policies that the company is undertaking. That will impact the overall slippage of the company and also the profitability of the company. The loan growth, the company is delivering single digit loan growth since last few quarters, as we are expecting the same trend to go on this quarter as well, when the overall loan growth is expected to grow by around 7.5 to 8.5%, but the deposit growth that will grow in double digit. We are expecting a 12 to 12.5% growth in the overall deposits of the company. The gross NPAs, the overall credit cost is expected to increase from the gross NPA will increase from 1.28% to 1.4%, and there would be a slight increase in the net NPAs also. The overall rate cut cycle will have an impact on the overall net interest margin of the company, wherein the net interest margin is expected to decline from 3.97% to around 3.9%. So it would again be a soft quarter for Axis Bank, wherein the NII is expected to grow in low single digit and the loan growth trend of single digit will continue in this quarter as well.
Alright, so a soft quarter is what we are expecting from Axis Bank. But Wipro, that is also set to report its Q1 earnings. Now let's get Pulkit to get us more details on what the street is penciling in.
After TCS, HCL, Tech Mahindra, now it's time for Western India Palm Refined Oil Limited, that is Wipro. So if we talk about the Q1 expectation of Wipro results, so for revenue in USD terms, we are expecting around minus 1.1% dip. For INR terms, around minus 2% dip. For EBIT, around minus 2.5% dip. For EBIT margin, 16 basis point dip. And for profit after tax, around 9.5% dip. If we talk about the segment-wise expectation, BFSI and healthcare may remain good and it can provide good cushion to the margins, but when it comes to the manufacturing, tech and communication, they will be soft and they might hit some on some margins. If we talk about the deal pipeline, it would remain solid, but when the revenue conversion comes in, it may remain sluggish. For the guidance that company provided last quarter for FY26 Q1, around minus 3.5% to minus 1.5% drop in CC revenue growth was expected. Now it would be great. It would be good to see how the company is shaping up with the results. If we talk about the key monitorables in the management commentary, FY26 guidance, what company is providing would be great to see. Update on the Marelli bankruptcy impact. Marelli was one of the clients, so how it is impacting to the business. The discretionary spend from the clients, the headcount and attrition trend, and most important, the tariff and geopolitical tension, how they are shaping up with the business and how it can be helpful. So it would be great to see how the company is performing and how the share will perform.
All eyes will be on Wipro, which will be reporting its numbers. But apart from Wipro, Indian Hotels, that one is also expected to report its numbers, and both top line and bottom line are expected to see a significant uptick on a year-on-year basis. Snehal is here to tell us more about what we should expect from IHCL's numbers this time.
Well, yes, once again, we're expecting to see a good set of numbers from Indian Hotels. This is what they had reported last quarter as well, an inline set of numbers. So, decent set of numbers last quarter, and we expect that trajectory to continue this quarter as well. On a consolidated year-on-year basis, if you take a look at the revenue, we're expecting this number to come in at around 1,976 crores to 2,000 crores, anywhere between that range, an uptick of roughly 27.5% on a year-on-year basis. EBITDA is seen at 577 crores, which is up 28% on a year-on-year basis. Net profit, we're expecting this metric to expand by 30%, or rather more than 30% on a year-on-year basis, at 325 crores compared to 248 crores this time last year. And for margins too, we're seeing a healthy expansion at 29.5% compared to 29% this time last year. Now, some key expectations that we're hoping to see from the company's numbers. Earnings growth is expected to be partly aided by the TajSATS consolidation that the company had announced last quarter. Just to bring our viewers up to speed and jog your memory a little bit on the consolidation of TajSATS means that TajSATS is now a subsidiary of the company instead of a joint venture earlier, and on the back of this adjustment in consolidation, remember IHCL had booked a gain of 307 crores last quarter as well. So this momentum is expected to continue this time around too. TajSATS is expected to grow in high teens on a year-on-year basis. Ginger portfolio to grow by 20%. High single-digit growth is what we're penciling in for the international segment. Their ARR, which is their average revenue rate, is expected to grow by 7% on a year-on-year basis. And RevPAR, which is revenue per available room, is expected to grow anywhere between 12 and 14% on a year-on-year basis. Now, some important factors to watch when the numbers do come out. Expansion and room addition plans. Any commentary on this by the management will be key to watch. Commentary on impact due to border tensions in North India. That could be a slight dampener on the company's numbers, so this is going to be crucial. And contribution from new business verticals, the likes of Ginger, Cumin, AMA Stays and Trails. What their contribution has been to the top line, this is also going to be important to watch out for. So watch out for IHCL's numbers, but well, yes, all in all, a good set is what we're expecting.
Alright, so that's what we are expecting when it comes to Indian Hotels results in the Q1 of FY26. But on that note, it's a wrap on this edition of Market Cafe. Ashesha and I will take your leave, but stay tuned as the market will take all the action forward.